Looking at the Markets with David Modell.
Hello and welcome to Looking at the Markets with David Modell. If you think that the volatility in the stock market is finished, you've got another thing coming. I want to teach you how to protect yourself and do it in a smart way. Protect yourself from big losses that are most likely coming very soon. There's going to be more volatility, believe me. Check out this chart from Real Investment Advice. It says, unfortunately, while asset prices have declined, they have likely not fully accounted for the impact to earnings, permanently lost revenues, and the recessionary impact from falling consumer confidence. Historically, the gap between the S&P 500, stocks, and the corporate profits, eventually these two lines are going to meet. And do you really think that corporate profits and revenues are going to jump up to meet stock prices? Yeah, not likely, especially with people being sent home from work, people not leaving their house, people not buying things, people not going on cruises, not going to hotels or casinos or any of that stuff, hardly. Much more likely, the stock prices are probably going to come down to meet this orange line here, which is corporate profits. And also probably the corporate profits are going to go down. This chart does not even factor in all of the craziness that's been going on and all of the lost revenues and profits and all that stuff. So you gotta find a way to protect yourself. Stop losses are a great way to do it. If you don't have an exit strategy of some sort, it's going to be a problem. And buy and hold, if you think you're just going to ride it out and do great, check out this chart from JP Morgan Asset Management, 20-year annualized returns by asset class. The average investor makes less than 2% per year, or has made, I should say historically, less than 2% per year over time. Even if you just buy and hold the S&P 500, it's been around 5.6%. Not great. Probably not enough to really be successful at investing. So if you think you're just going to buy and hold and do amazingly well, historically it has not worked that way and probably not well. And like I said, with the stock market probably coming down to meet corporate profits, it's probably going to be even less, I would imagine, than the historic mean. And I got this information from a friend of mine from SmartStopsnet, and I'm going to tell you this. Let me show you a chart from SmartStopsnet that I found on their website, and I'm going to put a link in the description below this video. I want you to check this out. Years to recover to previous all-time high. If you're not protecting yourself, if you think buying and holding is really great, yeah, okay, so it gradually goes up over time, the stock market, sure, but there are horrible periods, awful recessions, really painful. I mean, imagine buying and then having to wait 8 years just to break even, just to make your money back. And then the stock market dropped again, and now you have to wait another 6 years just to get back to that same level. Could you imagine that, sitting there for 14 years? And not making a penny, not making a dime, except for maybe dividend reinvestments. I suppose you could make a little bit of money, but those painful recessionary periods, all those years waiting to recover just to get your money back, just to break even, you want to avoid that. So, and again, I found a lot of this information from SmartStopsnet. Here's that chart, okay? And so this is not what compounding wealth is all about. This is not what risk management is all about, just buying and holding and hoping for the best and just riding it out. Not a great way to go. So I highly recommend having an exit strategy when things go against you. And here it is, staying safe during this hard time. You can see how SmartStops saved millions for subscribers. And you can get the actual results. Buying and holding, perception versus reality. I want you to read this because this is great information to have. And then I want you to check out SmartStopsnet. I'm going to put a link in the description below this video. I mean, what makes it so good and so powerful is that it intelligently adjusts for market conditions. And you can have many different types of smart stops. There's so many ways you can do it. It's really amazing. You can use a trailing stop. What is that? The idea is it's really simple. A value, either a percentage or a price or a fixed dollar amount, is set after a position has been entered into, typically as a stop loss order or a contingent order. All right, and so when it's reached through a stock's price drop, the decision to sell is automatically made. Now, trailing stops are not pushed down. They're not adjusted downward. They only move up. So if the price is rising, your stop is trailed behind it. So it can be raised but not lowered. All right, and that's all fine and good. Here's the problem. Trailing stops require you, the investor or trader, to choose the value, whether percentage or price point, and then that value stays fixed. It never changes. In other words, it doesn't adjust. If you use an old school traditional trailing stop loss, it's not really adjustable the way you want it to be. And the equities risk does not stay constant like that. It's not fixed. So why should your trailing stop values be fixed? Wouldn't you like to have a method that can adjust with the markets? Okay, so current trailing stop loss approaches are not ideal. They're not perfect. They're really not that great compared to what the SmartStops platform can do for you. The beauty of it is that it continually adjusts to give room for the stock or ETF price to run. In other words, if you're using SmartStops as a continual smart trailing stop order for your positions, you won't be stopped out too soon. And if you're just following the risk alerts that are offered through SmartStops.net, you will only receive a risk alert when there's a strong probability of future declines. And there are two different ones. You can use an aggressive stop or the conservative smart stop. If you want to be even safer, you can use the aggressive one. Or if you want a little bit more of risk and possible reward, you can use the conservative one. Either way, SmartStops recognizes there are different kinds of participants in the stock market. Some are more active traders, others are more long-term types of investors. Okay, so they have a more aggressive smart stop, which provides maximum downside protection. Typically lies closer to the current stock or ETF equities price. Okay, so it's more aggressive. All right, it's in that way it could be considered perhaps safer, whereas the conservative smart stop allows a little bit more price movement, resulting in few trades and less potential whipsaw. But most importantly, both signal families intelligently adjust in an effort to keep you in an uptrend longer while exiting early. That's key. In a prolonged downtrend like I imagine we definitely might see in the near future in stocks. As the infamous Howard Marks once stated, the road to long-term investment success runs through risk control more than aggressiveness. Skillful risk control is the mark of the superior investor. And there's also a great article here, Buy and Protect, keeps this crazy thing that's been going on right now, it keeps it from infecting your investments. See how much SmartStops saved its subscribers. All right, and it's got all these, check it out. How much would you have saved? Let's say, imagine almost $195 per share saved for IRSG. That's some huge savings. And that would have been some huge losses if you didn't use it. What about Tesla? How about $292.52 per share saved since entering the elevated risk trade? Wow. Okay. Think of the losses you could have saved yourself from. How about UTX, United Technologies? $64.20 per share saved through this system, and the list just goes on and on with Apple, Home Depot, Disney, so on and so forth. All the famous names that you could save so many losses, and like Howard Marks suggested, that is such an essential key to long-term success. You want to analyze your investment risk, you can go on there, see how much you can save. All right, and I am logged in right now to SmartStops.net. But to log in, you got to sign up. All right, so you want to go to the homepage and sign up. And your portfolio might be different from mine, but this is mine that I'm using with SmartStops. And I've got some of my favorites on here: Apple, Amazon, Google, Home Depot, Starbucks. I got the SLV Silver ETF on there, sure. SPY, that's the S&P 500. Got an oil ETF, USO. good stuff there, but I don't want to lose too much during what could be a massive market downturn coming. So what do? Well, I've got my triggers ready to go. Elevated risk state here. So that means I need to be aware. I need to be careful. And you know what? I've got my aggressive signals. I've chosen to watch those and the conservative ones. You can have both on your page here, or you can just pay attention to the aggressive ones or the conservative ones, or both. You can toggle it right here, totally your choice. But how do you get into this? How do you get those risk alerts? How do you get those smart stops that'll take you out at the right time so you won't lose too much? Well, you go to SmartStopsnet. And so you go to the home page and you sign up. I'm already logged in, okay? But if you want to go to that, so you go to my dashboard if you're already logged in. If not, then you go on the home page and you go to the sign up link and you sign up. You want to build wealth with less investment risk. This is the way to do it. Prevent yourself from huge unmanageable losses. Make smarter, more confident decisions with your money. Know when to buy or sell. Instant risk alerts. Increase your profits, hopefully, potentially, and potentially limit your losses. And if you want to try it for free, you can hit that try it for free button. Why not try it out? What do you have to lose by trying it, really? And then I'm sure you're going to want to buy it, because it's certainly worth it. You could potentially make that money back and a lot more just through not losing money in this downturn that I think is potentially coming. It's a simple, effective tool to manage your investment risk and optimize and monitor your portfolio. Check it out, SmartStopsnet. It's either get this and have a system, or deal with potentially the losses that are coming. I don't recommend just being a sitting duck and just buying and holding and hoping for the best, because that's not a real strategy. I believe that sitting it out is really not the way to go, and having to deal with these long years of losses on your portfolio. You don't have to. Instead, you can get SmartStops.net. Just type it into your browser, or you can click on the link below this video and check it out today. I know you're going to love it. I also wanted to mention that there are 3 plans for SmartStops.net. First, there's the 10 symbol plan. It's only $15 a month, and you can save 20% by billing annually. Then it's just $12 a month. Then the next plan is the 20 symbol plan. That's $30 a month, or you can save 20% billing annually, and then it's just $24 a month. And if you really want to take it to the next level, there's the 40 symbol plan, $60 a month, or you can save 20% if you bill annually. Then it's just $48 a month, plus a 14-day trial, and you can cancel anytime and receive an automatic prorated refund. I believe in trading safely, and you should too. And this is better than traditional old stop losses. SmartStops.net. You can automate it, you can get the alerts, you can trade smarter and safer. My name's David Modell. I'm going to keep on bringing you these great opportunities, great ways to trade safer and better. Go to the link in the description below this video, or type it into your browser, SmartStops.net. Thank you so much for watching and listening. I will talk to you again soon.